Welcome to Trade Finance Talks, a podcast from Trade Finance Global. During this series, we'll be hearing from global experts, as well as learning about the latest trends, technology and insights in the world of international trade and receivables finance. Episode 127.
The new CRR rules will be implemented in 2025. They will just be saying with Article 506 that EBA shall, during a certain time, calculate and find the right LGD.
My name is Deepesh Patel, editor at Trade Finance Global. Today, we're here in Abu Dhabi at ITFA's 49th Annual Trade and Forfaiting Conference. I have the great pleasure of meeting Silja Calac, board member and head of the Insurance Committee at ITFA, to talk about Basel 3.1, what it means for trade credit insurance and what the transition period is. Silja, welcome to Trade Finance Talks.
Hi Deepesh, nice to meet you.
You too. So quick introduction. Who are you? Where are you from? And what do you do?
My name is Silja Calac. I'm working presently at Banco Santander. I'm originally from Switzerland, living in Frankfurt at the moment.
Thanks, Silja. So I guess taking a bit of a step back, what is credit risk insurance and why is it important for trade?
Credit risk insurance is a risk mitigant used by banks to cover credit risk related to transaction banking. That means the bank substitutes the PD, probability of default, and the LGD, the loss given default, of the original obligor of a transaction by the PD and the LGD of the insurance. This way, the bank can enhance their credit capacity and reduce risk-weighted assets. Credit risk insurance is absolutely crucial for our economic system. A survey ITFA did in cooperation with IACPM in 2021 showed that banks, the 40 banks surveyed, use $136 billion of insurance cover, and these $136 billion facilitate $350 billion total transactions. A sneak preview of the survey we have done this year with IACPM shows that this amount has even increased to $400 billion. So insurance contributes $400 billion to the real economy.
I'm just going to reiterate those numbers, 136 billion total insured amount and facilitating a total transaction amount of $350 billion. So that's the key reason why credit insurance is so important for trade. Question about the ITFA Insurance Committee. What are you guys doing with regards to the implementation of Basel 3.1, particularly regarding capital requirements regulation or the CRR? I mean, why do we need to lobby in the first place?
About 2 years back, we noticed with the Insurance Committee that the Basel regulation foresaw that for insurance, the LGD should be 45%. Every time you work with an insurance company, never mind for which kind of business, banks will be in the foundation approach. So they cannot model their own LGDs any longer. They have to take the LGD which is prescribed by the rules, and these rules say it's 45%. We thought immediately this must be an oversight by the regulator, because when you lend money to an insurance company, the regulator wants to protect especially vulnerable creditors. And who are these especially vulnerable creditors? These are the insured, because they need to get their money in case of the insolvency of an insurance company. But when you are the insured, as we are when we are banks taking credit risk insurance, we are this preferred creditors. So it makes absolutely no sense. Being an insured, you also have a 45% LGD. We went to see the regulator and showed this oversight.
This relates to Article 506. What is Article 506 and how are you following up with the European regulator on this?
Yes, so Article 506 is, I think, quite a success story, because discussions we had with all the key stakeholders in the European Commission and in the Parliament led to the fact that the Commission submitted its draft, which is at the moment being voted for, inserted Article 506. This Article 506 says that EBA shall, within a certain period of time, discuss with ITFA and EIOPA, which is the European Association for the Insurers, which brings the insurers together, the same as EBA is the European Banking Association. So the European Banking Association shall cooperate with ITFA and EIOPA in order to find the correct LGD amount.
Thank you very much. I guess the other piece is there's a transition period, right? Why do we even need a transition period?
At the moment, there is not yet a transition period, and that's what we are working on. Because, as I said, the new CRR rules will be implemented in 2025. They will just be saying with Article 506 that EBA shall, during a certain time, calculate and find the right LGD. But the new rules, the new CRR, would be implemented immediately with the LGD of 45% first. And that would have the consequence that all banks now would, as of 2025, not be able to do insurance with a correct LGD anymore. And this would have a huge cliff effect because banks would not be able to do this big amount of credit risk insurance contributing so massively to the real economy anymore. So we need a transition period during this time while EBA, ITFA, IOPA are finding out what is the right LGD, that the prior LGD can still be utilized.
That makes sense. I guess what are the details then in terms of working with the EBA to find an efficient solution for insurance for transaction banking?
The most important work we have to do is to bring statistics. We need to bring default statistics. We need to also explain in detail how the recovery process works. This is what the Insurance Committee is doing now. We are approaching our members to help us give answers to the EBA and bring them the statistics they need. So it's really important that all our members cooperate with us on this topic.
Thank you, Silja. Final question. How can the industry come together to cooperate for the greater good for trade finance and credit risk insurance?
The best is that ITFA sends out surveys, that they participate in these surveys, that they take the time to give answers and honest answers, because only if we have this statistic, we can prove to the EBA that the LGD should be not 45%, but definitely something lower.
Reduce the LGD from 45%. That's the main takeaway from this podcast. That was Silja Calac, head of the Insurance Committee at ITFA. Silja, thank you for joining us in Abu Dhabi at the ITFA Annual Trade and Forfaiting Conference. Thank you.
Thank you.
Thanks for listening to Trade Finance Talks. Be sure to subscribe to our podcasts at tradefinanceglobal.com.